let's take a look first at bigger picture and where we are. So we are in the middle of previous 4 months balance, starting new month. February ended up somewhat like doji shape, but no material change. Maybe on weekly we can see that we broke below this multi-week balance and traded lower, but we closed above those lows, so not that negative. Most important low is this low, maybe even more than the low I've marked here, so 58.13, give or take. If we check quickly the daily, we can see that volumes picked up a bit, and I was checking which one was lower, so that one. On the other chart also, and looking at some VWAPs, we did reach 200 MA, which is interesting, and also 5% correction was around that level, and we bounced hard. Interesting that I missed it. Also in Bitcoin there was similar retracement, and for other VWAPs I have on other charts. So here we can see that both VWAP of the latest swing and year to date is here. Election VWAP is, I think, here I have it, it's much higher, and from September is higher, but from August is right on that point, so it was a good midterm entry, I think. Let's take a look at profiles. So we did fill the gap that we had here. We did some trading within this range that had no support previously, so it looks more healthy now. If we are to get higher, on the way down, here's only one day of trading with a real thin profile, so I think that if we trade higher we might backfill a bit there. And when it comes to implied volatility ranges for this week, is, I don't remember how much, but the ranges are as this blue rectangle shows. Last week we got below our range, and we got to the we didn't reach second standard deviation, but we finished the week inside, so not any material change happened. We are fairly extended on the standard deviations, so we did overshoot quite a bit when it comes to 20 MA standard deviation, but now they are even wider, so it will be harder to overshoot that much. So let's get back to our game plan. So looking at SPX, it's the same, and for Friday's session, let's quickly take a look at what happened. I wasn't trading last few days, so it's quite fresh for me. So we had the spike down, and we traded within the spike. We tried lower twice, and later in the day we had this big spike to the upside, which was also month end, and now we are even making a gap to the upside. So this might have been some short squeeze that happened, and now we are back within this three-day balance. So anything above 59.20 is positive, and let's see. So given this trade location, there is a really good opportunity if we have a higher look above and fail, then entering short here with a stop above daily high or above some ATR stop would be great. And then I would target gap fill, maybe revisit this close, Friday's close, but I'm not sure if more. I probably won't have a big enough position to have free scale outs, so if I'm able to add to the position on a pullback, then I might write it down to this area for a second target, or third rather. Alternatively, if I don't catch this early fade or it won't materialize, entering long at previous day's high is a nice trade also, with rather tight stops. I don't want any more dips, because there is also point of control. There is a point of control from Friday, from overnight settle, then we have this pullback low at settle, then we have overnight low. So I'd rather have multiple stops, like the other would be maybe around here, and another one at overnight lows maybe, but I'm not sure. And then I would target getting back to above yesterday's highs and then overnight high. Getting long is tricky and should be used with tight stops, because we have some elongated structure below and we can easily retrace a lot of it. So depending how the profile develops during the day, if we trend or not, I would like myself trading around value if we have rotational day. So trading the extremes back to the middle. Yeah, that's pretty much it for today.